Everyone here? Up. Hey. Good evening and welcome to our May meeting. Can everyone please rise for the Pledge of Allegiance? Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible. Okay. The first order of business on our agenda is an executive session to discuss pending litigation. Can I have a motion, please?
So moved.
Seconded.
We have a motion by Ms. Crumick, seconded by Mr. Raymer. All in favor, please say aye and raise your hand. Aye. Any opposed? Any abstentions? That item has carried 12-0-0.
635.
6 program funds. Just to let everyone know, there was a typographical error on the agenda, and it should have read 2020 program year, not 2019. And I now we have a public hearing scheduled for this program, so I'd like a motion to open the public hearing. Okay, we have a motion by Ms. Vasiliotis, seconded by Ms. Tarkington. All in favor? Please say aye. Any opposed? Any abstentions? That item has carried 12-0-0. Do we have any speakers here this evening? Ms. Vulgaris.
So I have to jump to my governance committee, which is down the hall, so I'll make this super quick. I just wanted to thank the 3 members of the BET who helped us out this year. That would be Mr. Weisbrod, Mr. Drake, and Ms. Crumick, as well as Tyler Fairbairn, who did a tremendous job. This was a slightly unusual year for us in that we had a more complicated process with the Housing Authority. We set up a small working group that comprised these 3 terrific BET members, and it worked out beautifully. I think everyone got what they needed. The Housing Authority got what they want, and it likely would not have been possible without the cooperation of the cross-disciplines between Tyler's office, the members of the advisory committee, and the BET, so I thank you all for your support. I welcome you all to join our committee. We'll take all 12 of you next year if you want to go on field trips and see great work that's being done by local not-for-profits, but I thank you for your work and for shepherding this through, and fingers crossed it goes in June. Thank you.
Thank you for coming and sharing those thanks. I echo them for my colleagues for their hard work. It doesn't look like we have other public speakers at this time, but I'm going to leave the public hearing open in case any speakers do arrive, and we'll take a vote up on this item a little bit later in the meeting. Which brings us to the next item on our agenda, which is a request for budget adjustments. The agenda lists 4 budget adjustment requests identified as non-routine. Mr. Michael was here earlier, but left at executive session. So the first.
Are you going to do Griffin first?
No, I'm not. I'm not. I'm going to have you read my annotated agenda. Make sure. So I just want to highlight to the BET that one of the items on our agenda was the Department of Public Works request related to the nitrogen credit exchange program. The Finance Department has advised that the BET does not need to act on this item. There's a budget line for this program, and the negative credit, which is explained by the materials in the package, will be reflected on that line item. And for the public who may be watching, this program's revenue and cost may fluctuate year by year depending on environmental conditions. And this year, due to the wet weather and the volume of effluent, the town needs to buy credits. In other years, the town has been able to sell credits, thereby showing net revenue over time. I didn't know whether there were any questions on this item, as we're not going to be taking it up, and it was addressed by the Budget Committee. If people do have questions. Ms. Vasiliotis. Do you know whether we need to have since Mr. Fox is still here, it's a good thing that I put the settlement later on in the agenda. Do you know whether we need to withdraw it officially, or we just?
I don't think you have to. I think you may want to.
Okay, Ms. Vasiliotis, would you like to make a motion?
So in that case, I make a motion to withdraw item
PW3, DPW, 232,000 additional appropriation sewer nitrogen credits.
Second.
Okay, we have a motion by Ms. Vasiliotis, seconded by Ms. Tarkington. Any questions? All in favor, please say aye. Aye. Any objections? Any abstentions? The motion to withdraw has carried 12-0-0. Okay. Okay, so the first non-routine item on the agenda is the CDBG grant program. As I mentioned before, I'm going to ask for a motion to move this item to the end later in the agenda to proceed the new business. That will allow any public speakers who show up later in the meeting to speak before we vote. Can I have a motion to change the agenda accordingly? Moved by Mr. Weisbrod.
Second.
Seconded by Ms. Moriarty. All in favor?
Aye.
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 Any-
Isn't there a typo on the second page of the resolutions for CDBG where it says $42,000?
Yes. There is indeed also a typo on that resolution. You have received a replacement, you should have received a replacement resolution,
At your desk as we came in.
yes,
Okay, all good.
and already correcting that. Okay.
Thank you.
Okay, which brings us to the other two non-routine adjustments. First item is NW4, Nathaniel Witherall, in the amount of $195,000. Can I have a motion to put this on the table?
So moved.
Moved by Ms. Crumick,
Second.
seconded by Ms. Tarkington. Ms. Moriarty, can you please give the Budget Committee report?
Sorry, we took up this item at our meeting last Tuesday. Mr. Simon and Mr. Ellis explained the request from Nathaniel Witherall. As explained in the documentation that we received for their new boiler system, which this board acted on as an interim appropriation, maintenance expense was exceeding their budgeted item, which is why they wanted to accelerate the capital investment. And so that put stress on their operating budget. They also experienced higher than budgeted costs for elevators and parking lots. The healthcare expense has also been discussed frequently with the BET. There was the implementation of the ACA that resulted in higher than required expenses. 9 part-time employees took advantage of the family plan last year, which I believe the cost exceeded, if I remember correctly, over $120,000 for those 9 employees. For next year, 27 people will qualify to be able to apply for health care. However, the application of the Affordable Care Act is only that coverage is intended for the employee and not for family coverage. So the costs, even if for those same 9 people took advantage of the health care plan, would be much lower, more in the range of $50,000. The discussion talked about whether it is better to focus on reducing the part-time hours so that we experience employee time below the average of 30 hours per week, which triggers the health care coverage, or should we be incurring the overtime for full-time staff? And the response to that question was that the less expensive approach is to continue to incur the overtime expense and perhaps trigger that Affordable Care Act provision. The Budget Committee voted 4-0-0 to recommend the transfer.
Thank you, Ms. Moriarty. Are there questions on this item? Ms. Hess?
We charge them for those additional healthcare packages. They'll pay that back, yes. And it'll, in effect, increase their negative fund balance, so over time, the town might have to increase the contribution to make them whole. But that'll show up in the next. Yes. Yeah.
Any additional questions? Okay, hearing none, we have a motion made by Ms. Crumick, seconded by Ms. Tarkington to approve the transfer of funds for Nathaniel Witherell and $195,000. All in favor, please say aye and raise your hands.
Aye.
Any opposed? Any abstentions? That item has carried 12-0-0. Mr. Michael, we have already disposed of your item. You're welcome to say a few words if you like, but we're all good. Thank you for staying, just in case. And Mr. Ellis, we've also just disposed of your item as well, so you're also welcome to say a few words if you like. Thank you. Thank you for being here. Okay, which brings us to the next item, just in time, FD3. It's an additional appropriation for water service for the fire department in the amount of $136,000. Can I have a motion to put this on the table? Motion made by Mr. Raymer. Seconded by Ms. Moriarty. Welcome.
My name is this on? Need to be on? Hello? Okay, thank you. My name is Larry Roberts, Deputy Chief, Greenwich Fire Department. Standing in for the chief and the assistant chief couldn't make it this evening. And probably most of you are familiar with the request to square up the Aquarian budget. Because of a Pura delay in billing, we were unable to pay the appropriate amount for the last two fiscal years, 17-18 and 18-19. Essentially, Pura hadn't set their new rates until after our budget was submitted and accepted. So, this is a request for a total of $136,000, which represents a shortfall in 17-18 of $23,904 and in 18-19 of $112,118. In fiscal year 17-18, the shortage was $23,904, and in 18-19 was $112,118, for a total request of $136,000.
Thank you. Are there any questions for Deputy Chief Roberts? Mr. Deuce?
So for those 2 years, were you accruing at the old rate, and this is just the incremental cost of the new rate?
And that's correct, and it was kind of compounded by the fact that there was a 5% discount in place for a tax credit that expired in 17-18, and once that tax credit expired, we did not get our new rates until much after that. Mm-hmm.
We should ask what the fire department's doing with all this water. No, we
Mr. Mason, do you have a question?
We ask ourselves that often.
Okay. If there are no further questions, we have a motion by Mr. Raymer, seconded by Ms. Moriarty, to make an additional appropriation in the total amount of $136,000 to the fire department for water service. All in favor, please say aye.
Aye.
Any opposed? Any abstentions? That item has carried 12-0-0. Thank you for being here.
Thank you very much.
Okay. We also have a request from our town attorney that we take up an additional item, the settlement of a legal claim. This is a new item, and to be taken up, it would need to be added to our agenda by a 2/3 vote. Is there a motion to take up this item?
So moved.
The motion by Ms. Crumick, second by Mr. Weisbrod. All in favor of taking up this item?
Aye.
Aye. Any opposed? Any abstentions? That item has carried 12-0. And now I need a motion to bring this proposed settlement before the body. Ms. Crumick?
I'd like to make a motion to approve the settlement in the amount of, settlement of the case Griffin v. Town of Greenwich for the amount of $890,000.
Okay. We have a motion on the floor. Is there a second? Seconded by Ms. Vasiliotis. Okay. Any discussion? Okay. So we have a motion for a settlement in the case of Griffin versus the Town of Greenwich in the amount of $890,000. All in favor, please say aye.
Aye.
Any opposed? Any abstentions? That item has carried 12-0. Thank you very much. Okay. There are also, I hope I have no further legal questions, Wayne. Said, I hope I have no further legal questions. Yes. Okay, thank you. There are also 3 routine applications on the agenda for this evening. Ms. Crumick, can you please move these routine items?
PW2, Department of Public Works for $70,000 for the transfer of highway materials. PD6 by the police, $6,000 for the approval to use a JAG grant. And PL1 from the Perrott Library in the amount of $15,000 for the transfer for interior painting expense.
Thank you. We have a motion by Ms. Crumick. Is there a second? Seconded by Mr. Raymer. Mrs. Moriarty, can you please give the Budget Committee report?
Yes, on DPW 2, the transfer of highway materials for $70,000. This expenditure will be to replenish the salt supplies that were utilized this winter. The rationale for having this expenditure now was that it is less expensive to purchase at the end of the season, and it ensures that salt will be on hand at the start of the next snow and ice season. The Budget Committee voted 4-0-0 to recommend the transfer. PD6, the Police Department's request to use the Justice Assistant Formula Grant for $6,000. This is a grant awarded to the town on a formula basis based on the amount of violent crime, which is why the grant amount is so low. The Police Department is proposing to use this grant to cover additional training in several key areas: disorder management, de-escalation, and an organized crime dark web effort. The Budget Committee voted 4-0-0 to recommend the use of the grant. The last item is PL1. The Perrott Library wants to transfer money for interior painting expense of $15,000. This is to cover an unanticipated expense: water leak through the caulking in the cupola window. The problem has been fixed and the area has been repainted. The Budget Committee voted 4-0-0 to recommend the use of the grant.
Thank you, Ms. Moriarty. Are there any questions on any of these items? Okay. Can I have a motion to approve all 3 items? Can I have a vote to approve all 3 items? All in favor, please say aye and raise your hand. Aye. Any opposed? Any abstentions? Those items have carried 12-0. Okay. Brings us to the assessor's report. Ms. Elliott.
Good evening. Good evening. Good evening. Good evening, Madam Chair and fellow members of the BET. I'd like to present the assessor's report for May 2019. First of all, senior tax relief for the 2018 grand list. We shall have 524 seniors receiving a tax benefit this year. That is up from 516 last year. Once the mill rate is set, I'll be able to determine the exact amounts, and I'll have that in our June report. But as of last Wednesday, we had 524 complete their application, so that's a good sign. It's up from last year. On the grand list of 2018, we have to date 7 tax appeals filed against the assessor's office. That's in relation to, usually we get 24, 25. So that is also a good sign for our tax, the number of tax appeals. That will also be added to the June, once we get the exact complaint from the law department. Those will also be added on to the June report. And finally, I'd like to point out there's a letter on the end of my report, and that letter is to all businesses, personal property accounts that have failed to file their declarations for the 2018 grand list. We're sending this letter out in hopes of getting people to comply before we send an auditor. This is their final chance, so to speak, to help them understand that if by chance, by mistake, they have missed filing this year, we'll give them the opportunity to file. There are some on the list that have not filed in a number of years. So those are those accounts we will definitely be, chances are we'll definitely be looking at them and having them file not only the current year but prior years as well. Does anybody have any questions for me this evening?
Ms. Tarkington?
Yes, I wanted to ask, in terms of the new senior, oh, I'm sorry, I am wrong, right? The new senior tax relief program does not go into next year, so I was going to ask about people with disabilities, but
Right, so
that's
not-
next year's question. Thank
Save
you.
that for next year.
Any other questions for Ms. Elliott? Okay.
So,
Mr. Mason?
On this property tax for the equipment and
Businesses, yes.
businesses, so this is something we do every year on a repeated basis. So is the amount that are not reporting going up or down, or is it pretty
It's about
consistent?
the same. It's about, we have about 4,000 plus accounts. Usually about 1,400 of them don't file. We've picked out about 75 that have assessments over $100,000. So we're going to start there. There's a lot of people who don't file, but we understand why they don't. They're small businesses and they have a minimum of 5, and we're not worried about those. It's the larger businesses in town that have a lot of equipment that we have not, and we haven't seen their filing in quite some time. Those are the accounts that we're really looking for.
So this is a continuation, an annual program.
Right.
Thank you.
Ms. Kromick?
Did we actually carry out this procedure last year?
No. Audits? No. We have not done audits in a while.
Okay, thank you. Any further questions for Ms. Tarkington? No? Okay, so motion to accept the assessor's report.
So moved.
Okay, motion by Ms. Tarkington, seconded by Mr. Raymer. All in favor of accepting the assessor's report, please say aye. Aye. Any opposed? Any abstentions? That item has carried 12-0. Mr. Mynarski, thank you for presenting the Comptroller's report.
Good evening, Madam Chair, BET members. A couple of the items are going to be discussed later in on the agenda, so I'll answer any questions anyone has on the Comptroller's report at this point.
Are there any questions for Mr. Mynarski? Ms. Kromick?
Just a quick question on the Hamilton Avenue claim. Is there any update on that or any sense of the magnitude of the amount of the claim?
The January 31st, the answer is no. As a matter of fact, the risk manager CC'd me on a email today. She's still waiting for information from the front office to submit to the insurance company.
If there are no other questions for Mr. Mynarski, can I have a motion to accept the Comptroller's report?
So moved.
Motion by Mr. Raymer, seconded by Ms. Tarkington. All in favor, please say aye and raise your hand. Aye. Any opposed? Any abstentions? That item has carried 12-0-0. The next item on the agenda is the Treasurer's Report. I note that we've received the Treasurer's Report showing the investing portfolio activity for the month of April 2019, and that we will refer the report. Are there any questions? No? Okay. Which brings us to a report from our Law Committee, a BET Standing Committee report. Ms. Kromick.
Thank you. I just want to report that the Law Committee, let me back up. The tax collector commenced a process of collecting delinquent taxes, as you may all know, and notices have been given to delinquent or sent to delinquent taxpayers. We were asked by the chair of this BET to take a look at the policies governing particularly the tax deed sale, and to assist in the establishment of procedures for the tax deed sale. So my esteemed colleague, Ms. Fasuliotis, has done some research, a fair amount of research, to look at the applicable state law, the process of other municipalities in preparing for tax deed sales, and has agreed to liaise with the tax collector, who has also agreed to liaise with her, and they're going to work on preparing or proposing procedures that may be utilized by the tax collector in the future.
Thank you, Ms. Crumack. Okay, did you want to talk at all about the resolutions, or are you going to wait for later in the meeting?
I was going to wait till we got to that.
Okay, thank you. We also have a report from our BET liaisons on public safety. Mr. Weisbrod, would you like to start off?
Michael Mason and I have had extensive discussions about the study that the BET is charged with to assess response times and other issues as it pertains to the fire department throughout the town of Greenwich. We've made excellent progress. A draft scope of services has been written. I think we're in fundamental agreement. I think each of the members of the BET has been presented with this first draft, and we're waiting for input from the members of the BET, and then we would proceed from that. I would only add that there is some element of, I think I'll stop there. I think I'll turn it to Mike to see if he wants to add anything.
Just to add to that, I have circulated our work that finished up today to our caucus, and we will opine on that and get back to it. In just getting familiar with the process and timelines, these have to go through purchasing, they have to go through law. After we can get a scope, we'll get that together, and then it'll embark on that process, and there's a timeline on that. So we look forward to everybody's input and getting back. And we also, I don't know how Mr. Weisbrod found it, because I looked for it. We also have circulated the original Buracker report, which, please read that. That goes back to 1989. It's amazing how the town has done so many things in that report, accomplished so many things. But that was included. We both started with a list of items that we thought should be considered, narrowed that down to the scope, but now it's really up for everybody's input here. So we await your input.
Okay, thank you to all of the members who are working on the tax collector issue, as well as the public safety issue and the fire services report, and Ms. Vasiliotis.
Just for point of clarification, when do the liaisons expect input from the body, I guess is the question. What is our deadline for providing information back?
So that was the thing I was going to say, and then I stopped myself. I mean, time is of the essence here, because we'd like to conclude this study prior to the termination of this BET. We haven't discussed a date, but within the week would be really great. I mean, Mike and I need to spend some more time together. Once we have the input from those, for everybody on the BET, it's been a pleasure, I would say, for the record, working with Mike. He's very knowledgeable about the whole fire issue, and the discussions have been extremely productive and pleasurable, frankly. So yes, as soon as we can get the input would be good.
Okay, Ms. Hess.
From a technical standpoint, can we actually send out that RFP prior to July 1? Can it be sent out before, or does it need to wait until July 1?
Yes, we can send out the RFP, but we can't enter into a contract until after the money is appropriate. Mr. Mason.
That was the part I was having a difficult time, and it's a conversation we had today. Mr. Minoski was saying when you send these out, there's a time frame where all respondents would come back to you with questions and a dialogue, correct? I have no idea what that time frame is. But that would help with the responses. And then once we have that dialogue, then, as I said today, we'd probably want to expand the liaisons, add a couple more to that, and then before we were even engaged in hiring. So the process is, it's not 1, 2, 3, but it is a process, and we're going to try to follow it.
We're absolutely going to follow a process. It will be our standard town procurement process. The procurement process is fairly standard when you issue an RFP. If there are questions, there's usually a clarification issued, and it does sometimes take a little bit of time, but But absolutely, we intend to follow the standard town procurement process, so. But thank you all it is important that we keep this moving forward. There's a lot of work to be done, and we would like to make sure it comes back to us while we're all still in office. So, so that's just a point of timeliness, and which brings us to the next item, the old business item, for which there is none. And then that brings us to the Community Development Block Grant Program again. I wanted to ask whether there were any other speakers who arrived who would like to speak during the public session about this program. And it doesn't look like that. So can I have a motion to put the Program Year 2020 Entitlement Grant and Reprogrammed Funds on the floor for discussion? Mr. Weisbrod.
So moved.
Motion by Mr. Weisbrod, second by Mr. Drake. Okay, so we have a motion by Mr. Weisbrod, a second by Mr. Drake. Ms. Moriarty, can you please give the Budget Committee report?
Sorry. The amount of the entitlement is $1,238,682. The Budget Committee received a report from Alexis Vulgaris, Chair of the CDBG Committee, and Tyler Fairbairn, I don't know Tyler's title, I'm sorry. Community Development Administrator, thank you. The recommendations contained in this year's awards reflect the priorities and the rubric established by the committee. The Budget Committee discussed the level of administrative expenses with the presenters. We also discussed the amount of the outstanding Housing Authority projects. It was noted to us that the proposed kitchen project, which was the one that was not funded, can be started with existing Housing Authority funds if they so determine. The vote at the Budget Committee was to recommend approval 400.
Thank you, Ms. Moriarty. Mr. Fairbairn, did you want to say anything to the board? We've had a lot of discussion on this, but we welcome you.
Sure.
Thanks.
Thank you to all of you for having our item on the agenda tonight. Thank you in particular to the three members, Mr. Weisbrod, Mr. Drake, and Ms. Krumnick, who personally assisted during the CDAC allocation process. This is, as Alexis mentioned, it's a slightly different process this time. Generally, we've been on a calendar year cycle that started in January that was not working so well for administrative reasons. So it is very helpful to us to now be on the July to June calendar. So we'll be before you now around this time every year. This year we had 37 total applications, 34 of which were funded, which is it's great. That's up from 22 last year. And it's a reminder. I spend most of my time, preparing resolutions and updating the resolutions I've made typos in, and digging through HUD rules and regulations. I spent an inordinate amount of time today researching whether any of our 2019 projects will impact the habitat of the long-eared bat. It's part of the process. But in 2018, which is coming to an end soon, we helped over 9,000 people with CDBG funds, which is the most important part at the end of it. It's among the most vulnerable members of the community. So I thank you for having us, and I thank you for moving our item on to the next step.
Thank you. And were any of the bats implicated in the 2019?
No, they should all be fine.
Thank you. We wanted to know the answer to that before we voted to approve. Okay. So you all have, we have a motion in front of us by Mr. Weisbrod, seconded by Mr. Drake. It's moving the amended resolution that corrects the program year as well as the allocation for reprogrammed funds that, and it is as presented on, in the package that you recently received. I can find the exact document. Would any other questions on this program? Hearing none, can I have a vote? All in favor to approve, please say aye. Aye. Any opposed? Any abstentions? That item has carried. Thank you for your work on this. And now I am told that I don't need a motion to close the public hearing. I can just declare it closed. So I am going to declare the public hearing on this item closed. Okay. Which brings us to our new business and the highlight of our meeting. The first item of new business is the approval of the 2019-2020 budget resolutions. The RTM, at its budget vote last Monday, May 13th, made a couple of changes to the budget resolutions that we had recommended. Ms. Crumick, will you please move the amended resolutions and give the Law Committee report?
Yes, I'd like to move the, the resolutions and the, well, is it just the resolution?
If there are two different amendments.
I will move the resolutions of the Board of Estimate and Taxation and Representative Town Meeting on the 2019 to 2020 budget. What a second.
Can we have a second of those amended resolutions? Okay, motion by Ms. Crumick, seconded by Ms. Tarkington. Ms. Crumick.
During the RTM meeting, there were several changes that were voted on, and I will take you to section 43. 43 has had 4 different sections, A, B, C, and D, and it was determined by the Legislative and Rules Committee that the D really shouldn't have been identified as a D because the sentence, each grant shall become an appropriation that the Board of Education shall add to the appropriate accounts, actually applies to subsections A, B, and C. So there was a vote to delete the D from 43. Then we had the Finance Committee asked for a change under section 44I, which references non-federal government and non-state of Connecticut grants, and the RTM voted favorably to add, to change the last sentence under I to read as follows. The Board of Education shall submit to the Controller, comma, the Board of Estimate and Taxation, comma, and the Representative Town Meeting, an annual report itemizing these grants. The RTM made this change to add the RTM as a recipient of the annual report. Ms. Chair, there are no other changes to the resolutions as they were presented to the BET in its prior meeting.
Okay, thank you, Ms. Crumick, but there's also the change on the bonding resolution.
These are the actual, is this in the book?
It was an extra handout.
Oh, in the caucus? Oh.
We'll take a vote on the amended resolutions as they were presented in the packet.
Okay.
All combined.
Okay. Then the other change was on the resolution authorizing the issuance of, and there's a change in the number here based on the votes of the representative town meeting. So the resolution reads, resolution authorizing the issuance of $43,004,000 bonds of the town to meet a portion of the capital budget appropriations in the capital plan for fiscal year 2019 to 2020, and pending the issuance thereof, the making of temporary borrowing for such purpose.
Thank you. So those are the changes. I don't believe the packet actually had the section 43 included, so when we vote on it, we will just, that is the elimination of the Roman net D in section 43. Are there any questions regarding the amended resolutions? Mr. Mason?
I would just take the board back to the first one that Mr. Crumick was talking about, the non-federal government and non-state grants.
Yep.
With that addition that the RTM put in there, there's no need for that resolution anymore. The only purpose for that resolution was because everything else in all those sentences, everybody's required to do. It's their job, it's their position, it's their responsibility. But the reason for that resolution originally is that when these grants came back in, the controller would set up an account, come to the BET for the account, we'd authorize it would be done. By adding the quote, and the representative town meeting in the annual, because we even had the annual report in there for them, basically there's no need for that resolution because that's what would have to be done under normal process.
Ms. Moriarty and then Ms. Crumick.
As I read it, they're adding a request for the RTM to receive an annual report itemizing the grants. The sentence prior to that, which allows for donations of cash to become appropriations, is still valid. So it doesn't require each appropriation during the year to go to the RTM. The only change was on the annual report.
Ms. Crumick.
No, I was just going to say if it wasn't. No, it's okay. So you're ready to vote on it.
Ms. Hess.
On the bonding resolutions, we don't have a black line, so I want to just I just want to confirm the only change that was made was the dollar amount change from 43,304,000 to 43,4,000.
That's correct.
Thank you.
Did you
already voted on it?
Okay. Are there any further questions on the amended resolutions? Ms. Vasiliotis?
Could I just ask when these resolutions are published that we change the red to black so that it's all one? Because last year, it seems that the red was kept and it caused a little confusion in the next year.
I'm happy to work with the budget director to ensure that we have these completed and that they will reflect in all black.
Mr. Deuce?
On section 6 of the budget, of the debt resolution, is that a change to the word as? Because it's in red.
That was already voted on by this body.
Okay, so that goes back
Just
to
giving you
Karen's
the
point.
changes
Got it.
that were
Thanks.
brought
Never mind.
to the RT by their committees.
Yes.
Okay, any further questions on the amended resolutions? Okay, hearing none, we have a motion on the floor made by Ms. Crumick, seconded by Ms. Tarkington to accept the changes as reflected in the RTM votes and as described by Ms. Crumick previously. All in favor, please say aye and raise your hands. Aye. Any opposed? Any abstentions? That item has carried 12-0. The next item on our agenda is the approval of the mill rates for the this one's fine. The approval of the mill rates for the 2019-2020 fiscal year. Ms. Crumick, can you please move the general fund resolution to put the item before us?
Town of Greenwich, resolution for general fund tax on assessment list of October 1, 2018 for fiscal year 2019-2020. Resolved that a tax at the rate of 11.708 mils on the dollar be and the same as hereby levied and laid upon the assessment list of the Town of Greenwich last completed as the tax for said town's general fund for the succeeding fiscal year, to wit, for the fiscal year July 1, 2019 through June 30, 2020. Resolved that the chairman and clerk of the Board of Estimate and Taxation shall forthwith file a certificate of the levying and laying of such tax with the town clerk, who shall record such certificate in the town meeting record book and obtain a receipt from the town clerk that this has been done.
Okay, we have a motion made by Ms. Crumick. Is there a second? Seconded by Ms. Vasiliotis. Mr. Raymer.
I would move an amendment, if I may, and the amendment is to substitute a different figure for the mill rate. The figure I would propose is 11.682.
We have a motion to amend the general fund resolution made by Mr. Raymer. Is there a second?
Second.
Seconded by Ms. Moriarty. Mr. Raymer.
I had some assistance from the budget director in determining this mill rate. I understand from the budget director that this mill rate produces a percentage of increase in the mill rate at 2.75%. I believe the dollar equivalent of the dollar amount by which the tax receipts will be reduced at the lower mill rate is, again, with the assistance of the budget director, approximately $810,000. Roland, please, if I have it wrong, tell me that I have it wrong. The logic of it is in part that we have derived, with the assistance of the initiative of the tax collector, as of last Friday, $2,731,638.04. There's sound reason for not applying all of that serendipity, but I did want to apply a small part of it in reduction of mill rate, returning to the tax collectors a small portion of this recovery, which otherwise would have been added to our fund balance, which is at this point a little higher than our policy in any event. So that is the rationale of my motion, and I hope that my fellow members will join with me in supporting that motion.
Ms. Moriarty, did you want to add anything? Okay. Mr. Mlynarski, I know you've prepared some materials on the fund balance, which perhaps might be relevant before we start a discussion on this.
I've handed out two documents. The first one is, they're both entitled BET Fund Balance Ratios. And then the second page, I crafted just before the meeting based on a couple of questions from BET members. But I'll stick with the first page, which is the fund balance ratios, and predicting a $2 million surplus on a GAAP basis. If you look at the top of the page where it says the total general fund balance was $59,990,568, that is what an audited number on a GAAP basis. It's the fund balance that Moody uses. However, the BET does not use that number. It uses different components of the general fund, which are above on the first set of lines with dollar amounts in them. The lines that have the 42 million, again, I'm in 17-18, I'm walking you through last year audited numbers. The 42.1 million, capital non-recurrent is 10.586 million. The risk fund balance of 1.475, and last year's budget produced a fund balance ratio of 12.89%. Fast forward to this year, a lot of these numbers are estimates. Now, again, I predicted on a GAAP basis about a $2 million surplus, and it changes the numbers for 18-19, where the unassigned is $40,031,190. The capital non-recurrent is $10 million. The risk fund balance is $0. It produces a $50,031,031 total. This is the BET's fund balance policy. The number on the bottom, the 62 million, is what Moody's looks at when they do ratios. Now, based on the actions tonight, this page is now become obsolete. Not materially, but the risk fund, which I had at $0, is now in a negative position because of the settlement. If you took the $900,000, it would drop the ratio, the fund balance ratio that I had here of 11.75. Is everybody following me? Yes. Down to about 11.54. It's a good increase from 12.89 to about 11.54. However, it's outside the fund balance policy of 5 to 10% of the current year's budget. Before I go to the second page, I'm going to get to, as a segue, to the tax collector's actions. Anybody have questions on the fund balance ratios? Okay. Second page, how did I get the $2 million deficit? You could see the revenues. The figures on the left, this is the column that starts with bridges, goes down to the state, special education, et cetera. If it has a 0, it was not budgeted. $900,000 for interest income was budgeted. The tax collection for prior years was $1,245,000. We get them every year. If somebody owes taxes, they're delinquent, they can't sell their house until they settle up. They have to pay all the delinquencies and the interest. And then the encumbrances, which was changed from $1.5 million to $1.7 million, all generated surpluses that add up to $10 million. There's the first four numbers, the $1.7 million, the $1.1 million, the $478, the $674, have already been received, they're final. The interest income, I've got 10 and a half months of data, so the $1.5 million is good. The first of the two numbers that are estimates are the tax collections, and the $3 million is for the tax collection operation whole. There's a lot of pieces here. For example, you don't collect 100% of the current year. We budget 99.35 and put it in uncollectible. We put in $1,245,000 for the prior years. We have an interest income estimate, and there's other pieces. Lauren Elliott spoke before about the personal property taxes. Beside the realty, the commercial, there's personal property on businesses, which is about $9 million, and then there's cars in the supplemental list. We don't collect 100% of the business on the personal property on the businesses, and we collect slightly more on the personal property for cars. Collectively, right now, the surplus is estimated at $3 million. However, Howard is doing such a great job that this number is probably going to go up because we've got 3.5 more months of collections. We've got May, half, June month, 60-day collection rule. And then the final number on the bottom of the 987 is strictly a guess. There's over 100 line items of small income. Most of them are break-even or slight surpluses. I'll give you a good example. You saw, if you go outside for the next couple of days, a couple of weeks, you'll see that a lot of people lined up to collect pay their beach cards. We've got over $800,000 that's not collected. Once we get to the 800, anything over that becomes a surplus. Now, moving down, there's three pieces to the deficit. There's the revenue piece, there's the expenditure piece, and then there's the use of fund balance. The revenue surplus, which I just explained, is $10 million. Again, it's an estimate. You have to subtract the use of the fund balance. GAAP requires, GASB on a GAAP basis requires you to use a subsequent year's use of fund balance, which means we have to reach over July 1st and take back $14 million, which factors in the $3 million for the risk fund. On a budgetary basis, we don't use 14.4, we use $3 million less. Then there's the final piece, the expenditure returns. Last year, we had $10 million returned. This year, we're estimating about 6.5. Some of the shortfalls are the insurance shortfall in the excess carriers, which is about $700,000. The BOE, for the first time in many years, we're budgeting break even. Last year they returned about $673,000. For many years before that, it was $1 million, $1.5 million, $2 million, et cetera. And then this, for the first time in a few years, the healthcare surplus is not as great as in prior years. That's how you get to the $2,031,000, which goes over to the other side, the surplus of $2 million, which moves the $59,990 up to $62. There was a question about the capital non-recurring, so I did a reconciliation on the bottom. It's straightforward. Last year's number was 10,586. You can cross-reference it to the top of the page on the left. You had the Ham Ave appropriation. You had the Julian Curtis appropriation. The three leaks that are appropriated are in the millions, but we're only on the hook right now for $25,000. For example, the big one, I believe, was Coscob. The earliest one was appropriation was about $1.9 million. We've only spent about $1.6 million, and we should get dollar for dollar return minus $25,000. And then the closeout is really a plug. At this point, we don't know at this point what the departments are going to return. We know that a month from now. As I stand here, I could tell you with accuracy what that number is going to be, so that's an estimate. Therefore, the $10 million. So the only change that's not noted here is back to page 1. I didn't factor in because I didn't know about the $890,000, which throws the risk fund into a deficit. I went pretty quick. I hope I explained the part about the initiative from Howard with the collecting the taxes. Now, if I could take the liberty to talk about next year, but Howard's doing is great news, but there's a couple of built-in shortfalls in the 1920 budget. The first one is we did not appropriate enough for Nathaniel Witherall. We appropriated $3 million. We probably should have done $5.3 million. So you've got about a $2.3 million shortfall there, all mostly in the revenue. The second shortfall is because Howard's doing such a great job with the tax collections, he's creating a shortfall, a built-in shortfall for next year. It's not meant to be a criticism, but if you're wiping clean all of that low-lying fruit, you know, you're taking away all of the prior year collections, you're going to have a lot less for next year. We budgeted $1,245,000, so there might be a shortfall of a couple $100,000. What's the third one, Roland? It was the
Healthcare.
Healthcare. Yeah. No, the healthcare is we're assuming you're going to need about $5 million more for there. There's the potential that the healthcare, we're pretty well assured that there won't be a mid-year spike in the healthcare. When we went before the RTM Finance Committee, we weren't sure. We had a built-in deficit of about $327. I convinced them not to take it at that time. So the healthcare is just simply going to be a spike. Oh, the other shortfall is the pension. You'll probably see a spike in the pension actuarially determined employee contribution, formerly known as the ARC, because of the bad performance of the fund this year, and the potential if the trustees vote to reduce the assumption discount rate from 6.5 to 6.25. I think, is that good enough to set the table for a mill rate discussion?
Sure did set the table.
Well, does anyone have any questions for Mr. Menarski first on his presentation? Mr. Drake.
Peter, thanks, this is very helpful. Please remind me on that page, that item called expenditure returns, please remind me what that consists of. 6.5 million there?
That is the budget from the first department all the way through the 999 to fixed charges. What drives that is on average, we average about 40 vacancies. Let's just say to pick a number. It could be, there's a number of policemen, firemen, teachers, et cetera, et cetera, et cetera. If a person makes $100,000 on average, a lot below it, a lot above it, and if they have like a 40 or 50% fringe benefit rate, so you have $6 million right there, using an average of 100 plus 40 or 50,000. The rest of it is office supplies, furniture, all the other items. It's everything else, a catch-all in the budget.
Okay, thank you.
I've gotten a message from a viewer at home. Mr. Conway, just to let you know that the Channel 79 feed was cut. Maybe you can try to reinstitute it. Ms. Moriarty.
Just wanted to know if you had any quantification of the potential impact of the change in the pension contribution.
It's a couple million. I can't predict if it
just the performance, maybe the performance piece only, not the change in the discount rate.
This year, the July 1st, 2018 actuarial report, which generates the formerly called the ARC, the ADEC, the annually determined employee contribution for the next budget year. It went up $2,580,000. If two things didn't happen, we would have had a small decrease in the ARC. Instead, we had a $2,580,000 increase. The first item was dropping the assumption rate, the discount rate from 6.5 to 6.25. And the second one was the early implementation. This was a precedent. In the past, we waited a year when in October, the police contract was settled, the impact of the COLA, cost of living increase on the actuary report, number one, I voted against it. The trustees voted to amortize it instead of the 15-year to 5 years. They wanted to do it in lump sum, but it was about a $780,000 hit to the ARC. So you have to factor in, the part I don't know, Ms. Moriarty, is I'm not going to vote for to go to a 625, but there might be votes there. All it is 3 to go to a 625, and that's huge as far as the increase. We do smoothing on the losses, the gains and losses, but that's going to impact it next year. So when you say next year, you mean the 2021 budget?
Right.
So I don't know at this point, other than the fact that it looks like it's going to be a couple $1 million higher.
If you, may I follow up?
Yep.
If you only are looking at the change in performance, would it be that magnitude?
No. Last year, the biggest hit, were the two biggest hits were the change in the assumption and the early implementation of the amortizing the COLA impact on the actuary report.
Thank you.
Mr. Deuce.
The change in the discount rate was the same amount by the change in the assumed performance. Both went to 6.5. Because the liability is so much bigger than our investment assets, you have a larger impact on the discount rate change than you do on the change in investment performance. But together, it was over $2 million, and the COLA added the difference.
Ms. Tarkington.
Yes, Mr. Minarski, when you're talking of Mr. Raymer's motion here about the collection of these receivables, are we double counting the collection of the receivables for the current fiscal year? Don't we already have them in our budget? And in fact, I believe what you said was that we count in our budget of collecting 99.35%. I might have missed that, but I thought that's what you said, in the current fiscal year. Is that what you said?
I said a bunch of things, but on the tax collector area.
Well, that's what I'm talking about. I'm talking about the collection of the receivables for the current fiscal year.
Yeah, we budget 99.35%, and we
Right.
factor in a non-collectible based on that. I believe right now we're at 99.7%.
Well, the numbers I looked at is we're at 98.96 based on the numbers that I've received, maybe, so we're actually under that if the numbers are correct in terms of our grand list and in terms of what's been collected or what hasn't been collected on today's Munis report.
Ms. Tarkington, is there a specific question?
Well, yes, the question is, I started out with, are we double counting the collection of the tax receivables for the current fiscal year? Because in this group of taxpayers, there were taxpayers whose payments have come in that were maybe due on February 1 or, this current fiscal year. So if we're counting them in this tax collection program and we've already counted them in our budget, are we double counting the collection of these? So I'm just concerned about Mr. Raymer's motion.
Mr.
Minarski.
Through you to Leslie? Yes. Are you questioning Howard's numbers, the 2.7, by double counting?
Well, I'm not the whole amount because it doesn't come out that way, but I am questioning the double counting of collection of receivables in the current fiscal year. I have never seen an aging of these receivables, so I'm asking you, are we double counting the receivables, particularly for the current fiscal year? This is a question.
To rephrase, I think your question is, of the tax collections that are as part of this tax deed program effort, are the payments made for amounts due in the 2019 fiscal year? What portion of the total value are attributable to those amounts? Because those might arguably, you would say, be included within what we expected to collect in the budget. Is that your,
That's
that is
correct.
your question?
And according to the numbers that I computed, we're still under what we had planned to, or we had budgeted to collect. The number that Peter has mentioned, 99.35%.
So the tax collector's here, I don't know that he has those numbers with him since the question wasn't referred in advance. I do have some information from him, but I'm going to let him respond. If you'd like to, Mr. Richmond, if you'd like to approach, if Mr. Minarski will cede the microphone for a minute, just to respond to Ms. Tarkington's question.
Before Howard gets there,
Yes.
just a point, if a taxpayer walks in and goes to the window, as far as the reference to aging of receivables, they can instantly tell you how many years you owe, list of, in reverse order, 17, 16, 15, 14, 13, et cetera. They can tell you by months, because they have to bring it current each month because they charge 1.5 points. So they instantly have all of that data requiring aging of receivables, and they have it on all segments, whether it's a realty, or it's a commercial property, whether it's a car or personal property business. But I'll let Howard answer the question.
Again, my question only related to the collection of receivables. Again, they don't collect anymore at the window, in heaven. But the collection of receivables of those people whose property taxes were due and payable in this current fiscal year. Now, they may be a little bit in arrears because the last payment was due on February 1, but they're still in this current fiscal year, and we have budgeted, as you point out, a collection rate of 99.35. And again, I have not seen any aging of receivables, so I don't know how to...
Mr. Richmond has joined us. Thank you for being here this evening. I trust that you understand Ms. Tarkington's question.
Well, I'll do the best I can to give the information. Hopefully it answers the question. We looked at 52 collections that have already come in, and of those 52, 29 of them were 2 years or less, 9 being 1.5 to 2 years, and 20 being 0.5 to 1. So I think that's probably the number that you're inquiring about.
I'm sorry, could you just run through those numbers again?
Sure. 2 years or less.
Right.
We divided it, there are 29 payments that were 2 years or less delinquent. And then we divided each year out so that the first was 1 year or a half a year, which would be the current fiscal year, and there were 20 of those that have paid. And then from 1.5 to 2 years, there were 9 additional payments in that time period. The approximate, and again, I cranked this stuff out at 6:20 at the request of the chair, but the approximate amount in 2 years or less is $1,110,580.40. Does that answer your question?
Not exactly, but it's close enough, and it, just gives me, I'm not comfortable with Mr. Raymer's motion.
Okay,
So, but I thank you very much for the information. And if you could just provide to Mr. Minarski an actual aging, year by year, that would probably be helpful. I don't know if that's something you can print out from your, that would be helpful, I'm sure, help us understand for the future.
Yes, we'll be happy to do that, and we'll get you whatever you need.
I'm sorry, if that's all right.
I had asked a similar question on the taxpayers who've paid to date, how many years delinquent they were, and I got that answer. I wasn't thinking in the construct of this current year, but I was thinking about the 1.25 million that we budget in future years and the implication, and my understanding is Mr. Richmond has collected 2.7 million to date, which includes current year people who are delinquent for current year taxes. But if you back out that 1.1 million, which is the past 2 years, you're still left with 2.6 million, even if you back out the 1.25 million that we budget. 1.6,
2.7.
Sorry,
you're back.
yeah, sorry, 1.6. You back out some portion of next year's budgeted delinquencies, and as he said, he's not done. So there is some flux in the numbers.
Thank you.
Questions down the end.
Well, while we have Mr. Richmond at the podium, does anyone have questions for Mr. Richmond? Oh, yes, Mr. Deuce. Mr. Deuce.
So the question is, what Leslie's asking, is any of the collections part of the 99.35? And it sounds like we have sort of an idea what that number is. And then the question is any of that part of the money that we're the 1, 2, 4, 5 that we're expecting to come in as well? Because we have in our budget, we're expecting to get in prior year collections. So what I want to make sure is the double dipping concept. We're not saying we took in $3 million, but how much of that's we're already expecting to receive part of the 99.35, and how much of that are we expecting to receive as part of the 1, 2, 4, 5. And when you take those two pieces out, how much is really left over, and is it even should we be having this conversation when we think about the millions of dollars of items that Mr. Minarski speaks about? So.
Well, I'm going to take the opportunity to respond and also clarify that talking about monies coming in and projected budget line items does not constitute double dipping. So if you do have a question about practices, I just ask that you not use a pejorative term in talking about it and just ask a question. We'll try to get an answer, but not to suggest that there's anything untoward in the practice of collecting revenues or applying it forward. Mr. Deuce.
Thank you. I'd characterize it as timing difference, not double dipping at that point.
That's fine. I accept timing difference.
I have two questions for Mr. Richmond. And by the way, thank you for your initiative, which we haven't seen for a while, and it's all very good. But I have two concerns. If I recall, you went after a certain people who had amounts owed above a certain threshold. And I actually would be more concerned about having exposure on some of these amounts owed to the town that are going to expire. The statute of limitations is 15 years. Now, I would have thought you would have gone after the oldest obligors to us as opposed to the ones that are over a certain dollar threshold.
I think Mr. Minarski said it best before. You go for the low-hanging fruit first. And that was the lowest hanging fruit because when you looked at the numbers and looked at the accumulation of it, that was the first place to start. There are a lot more places to go, and there are a lot more things I'd like to do, but you can only do one thing at one time.
Yeah, really, but against that, you have the argument of fairness. Only in arrears 33 months versus 12 years, I think it's more fair to go after the one who owes 12 years worth of taxes to the town.
Well, but it also, you have to throw a dollar amount in there, too. And I think that's one of the things that Karen and I will actually work on, because we will work together on that for future.
One of the problems with doing this is you have a negative arbitrage. You're converting an asset yielding 18%, and replacing it with an asset yielding 2%. And as long as we don't have any exposure with the 15-year statute of limitations, I don't see the great harm here, frankly.
Well, listen, as the tax collector, I took it upon myself to take the view that the town is not a bank, that the town is the town of Greenwich, and we need the operating money now, and that's why we're going after it, so that I don't think the collecting of the 18% every year, which the town will eventually get when a house is sold or whatever, is the way it should be done. And that's one of the reasons we're doing this. It hasn't been done in probably 9 or 10 years.
Well, thank you. I'm going to ask that members, that we're not, I thank Mr. Richmond for being here. We're not taking up the merits of his tax collection program right now. There are questions. I do appreciate the comments because they will speak to the work that Ms. Vasiliotis and Mr. Richmond are doing together, and I thank you both for that effort as well. But we are really talking about the application of the tax collection proceeds and how it impacts our fund balance. Ms. Tarkington, did you have something else?
No. That's all right. Well, I'll hold my question. Thank you. I want to make sure that we get some kind of an aging from Mr. Richmond so that to Mr. Minarski, if that's through you, if that's appropriate.
Okay, thank you. We'll follow up with that in a formal request. Mr. Mason.
Before I speak on the motion, that's before us. I just want to clarify a couple things that Mr. Menarski said.
Mr. Mason, is this for Mr. Richmond, or is
No,
this
no,
for?
no.
Okay. Any further questions for Mr. Richmond while we have him standing at the microphone? Okay. Thank you, Mr. Richmond. And Mr. Menarski, can you rejoin us?
Thank you, Ms. Chair.
Mr. Mason?
So, on the form that we just got handed tonight, expenditure returns at 6.5, you said that's typically run 10 million, correct?
8 to 10 million.
Yeah.
It was 10 million last year. It's traditionally 8 to 10 million.
And we've even had years a little bit higher than that. So that puts us at a shortfall on your estimate. Let's use the 10 million of 3.5. Pension going up 2. I think you said that there's a potential for the pension in the start of the next fiscal year, the actuarial computation going up 2 million there. Risk fund, we know we've already added to, and we know we have obligations there, plus interims. So, and you have a plug number of 529. So that really brings me to the motion before us. I think we've seen this motion before for other reasons this year. It's the work of the tax collector and the policy change, which makes our work a little confusing because we weren't really informed of this policy change ahead of time. But it really brings no benefit to the taxpayers, this motion. We've had guidelines. We had budget guidelines. We met them successfully. We met the guidelines as far as we're concerned. The RTM has approved the budget. We had departments work very, very hard this year to make those guidelines. Some didn't, with reasons. With this, maybe next year, they might turn around and say, well, guidelines aren't so important. You can use fund balance, BET, to close that gap. When I think about some of the cuts, I think about some of the cuts that we're talking in the police department and reducing teacher training that we didn't allow, but I guess there's a different message there. Do we want the RTM? Are we saying to the RTM, we really wanted you to reduce more of what you sent us so we don't have to use fund balance? I'm not sure what that message is. We know that we'll be spending more than it's available in our risk fund in the next year, probably sooner rather than later. My colleague on a budget committee said last year, and mentioned it in guidelines, that last year's zero increase impacted our base for this year coming up. That's a true statement. We had an extraordinary health care savings, and I think we all agreed that the taxpayer needed that benefit. So if I'm understanding Mr. Raymer's motion for, I'll just call it 800,000. So that means if we keep this up, that's $8 million more use of fund balance over the next decade. Or we have to raise $8 million more taxes over the next decade for what equals $36 per property tax bills this year. This $810,000 bringing the mill rate down. That would beg the question, why not more fund balance usage? We're at the top of our range. Why don't we change our fund balance policy instead of saying from 5 to 10? Why don't we just say 10? This is a discussion that's happened at many budgets. I didn't expect it to happen this one. There was talk of it, but then I was told that the numbers didn't warrant it. And I think we can have some arguments on the numbers if they warrant it or not. I'm sure this has a good intention, and I'm sure there's other reasons that may be superficial, but at the end of the day, the RTM, we send them a recommended level of spending. They make their changes as they see fit. They're expecting a mill rate slightly higher than this 2.75, whatever the actual number came out to be, 2.92 or 2.96, and I think that's what we should be doing. Now, in addition to that, if you were to recommend to me, as the controller, that we should apply our fund balance surplus somewhere. And I would say that should be done after the year really closes out in August, after the 60-day period that we keep the budget open for. I would say, count me in. If you were to recommend that to us and you wanted to do something with reducing a borrowing and benefiting the taxpayer, or making an extra contribution to our OPEB fund or our pension obligation to maybe help offset that.
Mr. Mason, are you asking a question?
No, I'm telling you that I'm
So-
asking you to not support this motion. I'm telling you the reason why. Am I clear on that?
Well, you're telling us a lot of things. I thought you were asking questions. So you
Well,
have no question. There's no
I'm
question
saying
here.
that this is where I think the BET should do. I think the BET should set the mill rate as the budget should be. If there is a separate discussion about extra amount in our fund balance, and I think there could be a discussion, and I think we could do that in August after we close the year. It'll be our September meeting. I think we could do that, and I would support that. But right now, I've read this book before, I've seen the chapters, I know what the pictures look like, and I think we should leave the mill rate where the RTM set it.
Okay. Mr. Raymer?
Yeah, I'll be brief. I mean, I challenge the proposition put forward that it's of no benefit to the taxpayers to reduce their taxes by a small margin. I think it's better to charge our taxpayers at a mill rate increase of 2.75 rather than at 2.98%. I think that's a benefit to the taxpayers. I appreciate that one gave a projection to the RTM of nominally what would be the mill rate increase, what would be the taxes at a budget that was put before them. But last time I looked at the charter, the prerogative to set the mill rate is ours, not that of the RTM and not that of the controller. I think my proposition was put forward very clearly at my one-sentence motion when I made it. And the one-sentence motion was that we've derived a benefit that we had not anticipated. It's not small. It's $2.7 million, of which only 1.2 or and a fraction was anticipated. So the remaining difference is a benefit that's coming to us now. This is, in a sense, an overtaxation of our taxpayers, which we can repay to our taxpayers by giving back a small portion of it. And I'm only proposing that we give back a small portion because surely it's correct that there are risk factors out there. But lest we accuse people of being tax and spend Republicans, I think what we ought to be doing here is just treating our taxpayers fairly. And so I'm proposing a slightly reduced rate of taxation, a mill rate of 11.682. That would be a 2.75% increase over the mill rate for last year.
For the record, I don't appreciate that comment.
Okay, Ms. Hess.
So I don't support this for many, many reasons. One is I do think that the benefit is much less than you think when you contemplate the conversation we had earlier. Two, you think about these coming up shortfalls in the millions of dollars. Three, we are not even talking about what potential costs could come down from Hartford and the impact on this town. They're still talking about potentially pushing down teacher pension. Concerns about the risk fund, it's now going to be negative. When you look at all of these negative headwinds, these challenges that are facing before us, we're within guidelines, right? Sure, would we like to have a lower mill rate that we could pass on? Absolutely, but we need to be prudent here. It feels arbitrary to me just to bring it down to a rounded 2.75%. I think with all of the uncertainty and all the challenges that we are facing right now as a town, it is more prudent and fiscally responsible for our taxpayers and our residents to just keep the mill rate as is, as it's gone through the process and been approved through us as well as through the RTM. Ms. Moriarty.
I wanted to start and just ask a clarification question on the healthcare, the increased healthcare expense that was identified. Is that for the fiscal 21 budget that potentially you see coming down? Or do it's in the middle of the year that
We got clarification that it probably will not be in the middle of the year. So we can expect healthcare increases for 2021.
Okay.
Probably in the same range as at least as what it was, 8, 9, 10%. But
Is
we
that-
won't be getting anything mid-year, which we were afraid of earlier.
Okay, and I know that when we had the town healthcare plan, it was a January to December program, so we had cost increases in the middle of the year. On the state plan, when do changes in cost?
The state plan is a fiscal year.
It's a fiscal year, okay.
The town plan was fiscal, but when we went to an HSA plan, the deductible piece tied into the IRS calendar year. So that's why we had to have the health care on the calendar year.
Okay, all right, so we're back to the fiscal year. Thank you for that clarification. If I can make a comment then related to the conversation that's been...
Can I just ask for further clarification on the healthcare, which I had a question, and then maybe while we're still on topic. Didn't the town used to have a working group on healthcare that used to monitor where we were and focus on improvements?
We did when we had our own insurance coverage, but now that we're part of the state, we're just kind of sitting on the sidelines looking to see what the state does. We don't really have any choice in what the state does in terms of formulating a healthcare plan or coverage.
But that working group did more than just evaluate the insurance coverage, correct? Was it, or they didn't look at sort of performance issues and use of premium and claims as well, or?
We did a lot of study looking at the claims, the high-cost claims, which is what was driving our annual costs to a large degree.
Ms. Cormick?
I would just add, as someone who attended those meetings with Ms. Weisler in the prior BET, that we were working with a consultant, One Dimensions, and they would review the catastrophic claims on a monthly basis so that we'd get a pretty good understanding of what the numbers were looking like, what the claims were looking like. And to my knowledge, that group, which was quite large, is not meeting on a regular basis, although I was initially told that the reason we weren't is because we didn't have the claims history from the new state partnership plan, and that I would think by this point we have some information that might be shared.
And we did recently got the claims for the calendar year of 18, and that was distributed to everybody. That shows us running 20% over the premiums.
Thank you, Mr. Geiger. Ms. Moriarty?
Yes. I want to point out to my colleagues that at the Budget Committee last Tuesday, we did review the run rate on both revenue and expenses, and I think we ended up about where Mr. Minarski came up, that fund balance most likely is about $2 million higher in fiscal, estimated for fiscal 19 than over the prior year, and that did not incorporate the tax sale revenue. I agree with the comments. This is one of the most important decisions we make. It has an impact on all our residents. We know that any reduction in mill rates does make this board's job harder for the next year because the base is lower. I would say that when our budget guidelines are a range of expected increases in the mill rate, it's based on what we know about operating expenses and revenues. Well, we've had new information about revenues since the guidelines were created and since we approved our budget even, so that there is new information which I think is responsible for our board to consider. That's not just the tax sale revenue. Clearly, it's the other information Mr. Minarski identified. We know there are headwinds, but there seem to be in this board always headwinds. We see a lot of negativity and things that could happen, and we have been able to manage them thus far. We're talking about $800,000. Our budget is $444 million. It is not a significant amount to us. It does impact homeowners, and it does make this board identify the commitment that we are continuing to look at how we can reduce the cost of government going forward while still trying to meet expectations. And that's a balancing act that we have to work with every year. So to me, this is being responsive to new information that we have with cash in hand. A lot of the things that we're looking at are occurrences which may happen. We don't know timing, we don't know when, we don't know if, and I think we have to weigh all those factors. Thank you.
Mr. Weisbrod?
Yeah, and one other thing to add that we haven't mentioned, it's in the summary, is the interest income, the positive variance on interest income, which is a reflection of some excellent work at the BET in terms of enhancing the types of investments we can invest in without incurring additional risk, and the resultant contribution to, granted rates have also gone up, but I think also the mix of investments that we have, U.S. Treasuries, for example, which have yielded higher than some of the bank deposits that we had before. So there are, as Leslie just said, there is new information that needs to be taken into account, and the question would be if you were to return all of it to the taxpayers, that might be more than you should do, but taking a component of that, even if it's symbolic, to say that if we have some excess in the fund balance because of actions taken by the tax collector, actions taken by people on the investment committee, or other events, then it's only fair, correct, and right to return at least a piece of it to the taxpayer.
Ms. Tarkington.
Yes, I would also like to say that I won't be supporting this motion for many of the reasons my colleagues have made here. But I would also like to say that I would like to see a reduction in the mill rate, but I'd like to see it because we are restraining spending rather than basically using fund balance, which I think at this point in time, it's getting harder and harder to predict some of these things. I think that as we add debt, we're also going to need to move our fund balance up, and we need to be realistic about that. We've heard that from the rating agencies with AAAs that have more debt. So if this motion should fail, I will be making a motion to lower the mill rate ever so slightly, reflecting that mill rate that came out of the RTM vote, and it would lower the increase in the mill rate by 2.97% rather than 2.98. Thank you.
Mr. Turner.
Yes, Madam Chairman, through you, I'd like to ask Mr. Raymer a question regarding assuming we do, this motion passes, 890,000, what kind of net number are we looking at? I was under the impression it was 2.7 minus rounding 900,000, and now I'm hearing it's a different, the 2.7 is a lower number because of accounting. So do we have a number?
Mr. Raymer?
That may be a Mr. Bernarski question, by the way, I'm not sure, but.
And it will be.
Okay.
Just to make one small correction, the dollar significance of the change to a percentage increase of 2.75 instead of 2.97 or 2.98, again, with the aid of the budget director, is 810,000, not 890,000.
Okay.
Not that difference is important, but I'm not sure that I'm able to answer the rest of Mr. Turner's question. It might be more appropriate that it come from the controller in any case.
I'm not sure I understood that question. It was my understanding that Mr. Raymer simply wanted to go to 275. He got a number from the budget director to get to 275, and it's that simple. I didn't get the second part of the question.
So if I understand Mr. Turner's concern, and Mr. Turner will correct me, is that this evening we've settled a case at $890,000, which effectively gives us a negative on our risk fund and therefore a diminution in the fund balance. You indicated, I believe, that instead of the fund balance being, as you had originally projected, to be at 11.75%, our fund balance is at 11.54%, if I understood Mr. Minarski correctly. And that might be the question, the answer to Mr. Turner's question, that the available fund balance at this point, in the face of our policy of running a fund balance between 5 and 10%, our fund balance today is at about 11.54, a little bit less than the 11.75 that the paperwork of Mr. Minarski had before we settled the Griffin case.
Okay.
Does that answer Mr. Turner's question?
Yeah, it does.
Okay.
So.
I just want to clarify.
Ms. Moriarty?
Just to clarify, the Griffin case was known to this body and the law department and was considered when the $3 million allocation to the fiscal 20 risk fund was made. So while the expenditures made this year, it was budgeted for next year.
I just, the reason for my question is I just want to make sure that we're being thoughtful about the cybersecurity risk that we still have outstanding, and though it's being addressed, we know it's significant. We know the town citizens' data is not safe. So as we go down the path of reducing the mill rate, assuming we do that, I would hope that it's only slight in that when we, in anticipation of a much larger expenditure in fiscal 1920 to remediate, and we know we're going to have to do that. We have town departments that don't even have the essential apparatus for data protection today, at least at a reasonable level. That's going to be ahead of us, and maybe that's another headwind that my colleague Ms. Hess talked about. But I'm going to support the motion because of the small amount that we're looking at. Again, keeping in mind that we need to be very thoughtful about this unanticipated number coming down the path.
Mr. Mason.
For you, Madam Chair, Mr. Minarski, were these two documents just created today? BET fund balance ratios, June 30th estimated, and fund balance.
The first document was created years ago.
Yeah, that's the old.
I peel off each year.
Okay.
The second one was a reconciliation. That was created a couple hours ago, the second page.
Thank you.
It'd be to make the first page more clearer.
The point of my question for those wondering is, we have a statutory obligation to report to the tax collector what the mill rate is today, and I'm not today by a certain date in the month. So, again, we tend to go into meetings with this ahead of time so we can, go over our thoughts, and so I just wanted to make it clear that this was done this afternoon.
Actually, the deck might be in the wrong place.
Okay.
She came in with some illustrative materials that might.
Hello. Are you here for the BET or? You're welcome. You're welcome to stay and join us, but. Okay. Is there further discussion on this item? I've been very busy. Mr. Drake.
Thank you very much. The $810,000 is not a deal breaker or a deal maker, as we all know. But I think there's a more important topic here, that what ultimately we're doing is, in a small way, decoupling taxation from spending. The spending was tuned to go up 2.97 or 2.98%, and to decouple the taxation trend from that is not sustainable. It's short-term thinking. Over the long term, the taxation trend and the spending trend have to align. Now, we have quirky, unusual events, and Mr. Richmond is a hero this year, and so for that to be used as a justification to decouple spending from taxation, which ultimately, in arithmetic, have to align over the long term, is a kind of short-term thinking, which is, for me, a euphemism for suboptimal thinking. So I think it's not what we want to do.
Okay. Ms. Vasiliotis.
Sorry. I just find it a little amazing that last year we had a discussion at a zero mill rate of lowering it to a negative number, and this body chose not to do that when we had the opportunity to do so. And now this year, we are again having a conversation, and the reverse is being discussed. And I'm wondering if it's because last year it was 0 and this year it's 2.97. Because when you look at both of the situations, they really are very similar. I'm concerned because there are storm clouds brewing. We're going to be facing a 2020 reval, which will probably significantly shift the tax burden, and it will be impactful. We will also not, I'm hoping that we won't see an overall decrease to our grand list. But if our peer communities are any indication, we've seen New Canaan's drop 7.15%, Weston 6.3%, Reading 4.0%, Wilton 2.08%. So we will be also facing greater pressures as that reval is completed. We also don't know of other unfunded mandates coming from the state, but two that are of concern that may happen, may not, but if the governor's proposal goes through, we might have an increased share of the teacher pensions allocation, which is expected to be $1.3 million in 2019 and double that in 2020 to $2.7 million. So these are additional costs we're going to have to absorb. I don't support using monies from our fund balance to lower to 2.97. I think we need to look harder at our spending, which was 4.3% this year. We did a horrible job in reducing spending, and we need to be better at it. I'm sad to say that we've constructed a fiscal year 20 budget with no meaningful reductions. And for these reasons, I'm not going to be voting for this to manipulate the mill rate lower, even though I believe we failed our constituents this budget session.
Okay. Are there further comments on this motion? Ms. Vasiliotis actually said some of the same things that I was thinking as I was scurrying through the minutes from the prior year's meeting, where in fact there was a motion to use fund balance to reduce the mill rate proposed by 6 members on the other side, actually without a reduction in spending, just an application of fund balance. So many of the arguments that you heard tonight actually were reversed, of course, which I guess is maybe not surprising. However, on the other hand, the discussion that we had last year was about our whether we needed to revisit our fund balance policy, and I was reminded as I was preparing for this meeting that we did have a lengthy conversation at last year's meeting based on the motion to spend down the fund balance, which was over the targeted policy. We did call a special committee to look at the town's fund balance policy. They did make a recommendation, although they rewrote the policy. They kept the targets and the composition the same. So, and that fund balance policy was presented earlier this year. It was approved 12-0-0. In truth, different people can agree on different things, but that was having had the conversation last year about whether we should maintain a fund balance over and above the targets. We took it up again. The board reaffirmed the fund balance policy, and we are here still slightly over the upper range of that targeted fund balance policy. The report of the Fund Balance Committee, which is fairly extensive and was in our meeting materials, I believe from February, for the first read, did talk about potentially lowering the current level of fund balances to the extent that it stayed over the targeted range in a responsible way, and may take several budget cycles to accomplish. In my view, I do agree with all of my colleagues that that we are facing headwinds in the town, and we do need to continue to look at the way we operate. We probably want to put a call out to reinvigorate that healthcare task force that looks at the level of our claims and where we sit in terms of how we manage, whether there's a way to better manage so that we can perhaps lower the potential increases of healthcare costs. But I do think we work very, very hard to find the right balance between spending and tax rate. And given the personal headwinds that I keep hearing our residents are facing, any little bit, even if it's a small percentage, in keeping with the framework of our fund balance policy, I think is within our responsibility to look at, and I think that's just what the motion does. So if there are no further comments on Mr. Raymer's motion to amend, let me find the exact wording. Motion to reduce the mill rate, where is that? Mr. Mason, do you have the wording of your motion?
11.682.
Okay.
Instead of-
To amend the mill rate resolution that's before us to read 11.682
instead of 11.708.
11.682. So that's the Raymer motion to amend, seconded by Ms. Moriarty. All in favor, please say aye and raise your hands.
Aye.
Aye. All right, so actually, I'm going to have I think I'm going to have a name vote, just because I think it's clearer for the minute takers. Okay. Raymer motion to amend. Mr. Deuce.
No.
Ms. Hess.
No.
Mr. Weisbrod.
Yes.
Mr. Drake.
No.
Mr. Mason.
No.
Ms. Moriarty.
Yes.
Ms. Oberlander, yes. Ms. Crumick.
Yes.
Mr. Raymer.
Yes.
Ms. Tarkington.
No.
Mr. Turner.
Yes.
Ms. Vasiliotis.
No.
So that vote is 6-6, and I'm going to exercise the tie-breaking vote to make it a 7-6 vote on the Raymer motion to amend. We now have an amended motion for the general fund tax assessment. Are there any further amendments to this resolution? Okay, so we have a motion on the floor, the Town of Greenwich resolution for general fund tax assessment list of October 1, 2018 for fiscal year 2019 to 20. Resolved that a tax at the rate of 11.682 mils on the dollar be, and the same is hereby levied and laid upon the assessment list, the Town of Greenwich last completed as a tax for said town's general fund for the succeeding fiscal year, to wit, for the fiscal year July 1, 2019 through June 30th, 2020. And the second resolution as printed on the resolution that was included. I'll start again with Mr. Deuce. This is a vote on the amended resolution. This is,
11.68.
yes.
Yes.
Ms. Hess.
Yes.
Mr. Weisbrod.
Yes.
Mr. Drake. Mr. Mason.
I'm abstaining.
Okay. Ms. Moriarty.
Yes.
Ms. Crumick.
Yes.
Mr. Raymer.
Yes.
Ms. Tarkington.
Abstain.
Mr. Turner.
Yes.
Ms. Vasiliotis.
Abstain.
And I am a yes. That item has carried 9-3. Sorry, 903. Thank you for the clarification, 903. Okay. Which brings us to the second resolution in front of us. Ms. Crumick.
Resolution for sewer maintenance fund tax on assessment list of October 1, 2018 for fiscal year 2019 to 2020. Resolved that a tax at the rate of 0.401 mils on the dollar be and the same is hereby levied and laid upon the assessment list of the Town of Greenwich last completed as the tax for said town sewer maintenance fund for the succeeding fiscal year, to wit, for the fiscal year July 1, 2019 through June 30, 2020. Resolved that the chairman and clerk of the Board of Estimate and Taxation shall forthwith file a certificate of the levying and laying of such tax with the town clerk, who shall record such certificate in the town meeting record book, and obtain a receipt from the town clerk that this has been done.
Okay, we have a motion putting a resolution on the floor made by Ms. Crumick. Is there a second?
Seconded.
Seconded by Mr. Raymer. Okay. Is there a discussion on this resolution? Okay. Hearing none, I'm going to call for a vote on the sewer maintenance resolution assessing a tax at 0.401 mils. Okay. Mr. Juice.
Yes.
Ms. Hess.
Yes.
Mr. Weisbrod.
Yes.
Mr. Drake.
Yes.
Mr. Ms.
Yes.
Okay, you guys are too fast for me. Ms. Crumick.
Yes.
Ms. Tarkington.
Yes.
Mr. Turn. Oh, sorry, Mr. Raymer. My notes are on 2 pages. Mr. Raymer.
Why, yes.
Okay, sorry about that. Mr. Turner.
Yes.
Ms. Vasiliotis.
Yes.
And I'm also a yes. That resolution has carried 12-0-0.
Next is a resolution for sewer improvement fund tax on assessment list of October 1, 2018 for fiscal year 2019-2020. Resolved that a tax at the rate of 0.057 mils on the dollar being the same is hereby levied and laid upon the assessment list of the town of Greenwich last completed as a tax for said town sewer improvement fund for the succeeding fiscal year, to wit, for the fiscal year July 1, 2019 through June 30, 2020. Resolved that the chairman and clerk of the Board of Estimate and Taxation shall forthwith file a certificate of the levying and laying of such tax with the town clerk, who shall record such certificate in the town meeting record book and obtain a receipt from the town clerk that this has been done.
Okay, we have a resolution put on the floor by Ms. Crumick. Is there a second? Seconded by Ms. Tarkington. Any discussion on this motion? Okay. Just to spice things up, we'll start with Ms. Vasiliotis this time. Mr. Turner.
Yes.
Ms. Tarkington.
Yes.
Mr. Raymer.
Yes.
Ms. Crumick.
Yes.
Ms. Moriarty.
Yes.
Mr. Mason.
Yes.
Mr. Drake.
Yes.
Mr. Weisbrod.
Yes.
Ms. Hess.
Yes.
Mr. Deuce.
Yes.
And I'm also a yes. That item has carried 12-0-0. Mr. Geiger, did I miss anything on the resolutions? Okay, we got all of the budget resolutions done. Thank you very much for your help, which brings us to our last item of new business on the agenda, which is reconsideration and vote of the 2019 M&C compensation program. You received some additional materials by email this morning. Ms. Tarkington requested that I add this item to the agenda. Ms. Tarkington, can you please introduce the item?
Yes, Madam Chair. Should I read the resolution? Resolved that the Board of Estimate and Taxation amends the motion of March 25, 2019 regarding the M&C compensation pool to decrease the pool from 2.5% for fiscal year 2019-2020 to 2% according to the following principles. First bullet point, a 1.5% increase for M&Cs with performance ratings of, quote, exceeded objectives, close quote, or, quote, met objectives, close quote, as long as their salary was below grade maximum. And the second bullet point, an additional, quote, high performance, close quote, increase for those who consistently go beyond standard expectations and stand out as a performance leader and/or demonstrate outstanding performance in a special role or project. An additional 0.5% can be awarded for those M&C employees who meet either or both criteria in an excellent manner.
Okay, thank you, Ms. Tarkington. We have a motion on the floor. Is there a second?
Second.
Okay, we have a motion by Ms. Tarkington, seconded by Ms. Moriarty. Ms. Tarkington.
Yes. Also, this was also distributed with the motion. The RTM, at its May 13, 2019 budget meeting, approved a motion to reduce fixed charges Object Code 901-57940, by $38,567 as the sum of a partial reduction of the management and confidential pay plan salary increase for 55 employees. The RTM motion requests that the proposed maximum individual performance salary increase be reduced by 0.5% from 2.5% to 2.0%. The RTM Budget Overview, Finance, and Education Committees spoke in support of the motion, as the town and BOE have 11 labor contracts that represent over 2,000 employees in negotiation in the 2 fiscal years, 2019 and 2020. The vote at the RTM passed 128, 62 to 1. Based on the RTM's strong vote on an item that requires further BET action, the M&C pay plan salary increase is on the BET agenda to be revisited.
Thank you, Ms. Tarkington. Mr. Drake.
I just have a question, maybe Peter can help me. The way this first bullet in the resolutions is written, it has these words, as long as their salary was below grade maximum. Does that have an unexpected consequence in the case of some employee, some individual who is already at the upper bound of his grade maximum, somebody in whom we have high confidence or has high skills, who's bumping up against the ceiling, will these words compel that person to get no raise or only the 0.5% in the second bullet? I don't think that's what we want.
Ms. Tarkington.
I was just going to say, this motion is consistent with what we've seen before in the HR committee's meetings, that was, approved by the HR committee earlier this year, and that we've seen as motions in previous years by this board. And there is, originally the management and confidential employees had gone onto the Hay Plan, and there is a very similar structured program, a bit more complex, but this is very typical of what happens in the private sector also. So it's,
But it doesn't answer the question, is there somebody bumping up against the ceiling?
There used to be. I don't think there are anymore.
Mr.
First of all, explain the range. There's a minimum, there's a middle, and there's a upper limit. And I would need the chart in front of me, but there was one lawyer in the law department who I believe was touching up against it. And I'm not sure if he's still there. But I think it impacted only one employee. Mostly everybody else is nowhere near the maximum. I could double check that and get back to the BET. But it might impact one person.
Yeah, I remember I think you distributed this, and I can confirm that that was my understanding as well.
Mr. Raymer.
Through you, Madam Chairman, to Mrs. Tarkington, I don't know if the provision would exist in the first bullet point. Why would it not exist in the second bullet point? If it's a concern that a person be within the maximum for their pay grade on the 1.5% rise, is it not a concern if they exceed the maximum, if the additional 0.5% is applied? Why would not the clause appear in both bullet points?
Ms. Tarkington.
I'm sorry. I suppose if they don't even get the first layer, then the additional bonus would therefore never happen. So therefore, it's just a matter of process.
No, it's not.
Mr. Raymer.
No, except the hypothetical that the person might be within the maximum for the 1.5% rise, but the additional 0.5% would take them above the maximum. If it was the concern of the movement not to have the maximum exceeded with the 1.5%, I'm not sure I'm understanding why it's not the same concern on the additional 0.5%.
I'm going to take the chance of responding to that. This language is the same language that was used for the the program that the BET approved a few months ago, and it's the same language for the program that was approved last year. So I'm going to guess that it was an oversight on whether they exceeded the salary below grade maximum. I don't think it was discussed with regard to the incremental, whether it be the high performance for excellent or for the additional 5.5% that it's no longer included in the program. But certainly, if we want to clarify it, we can amend this resolution to make that clarifying correction so there will be no question about it in the future. Would someone like to make that motion? Well, I'll make that motion because I think it's not useful to have an open question on it. So I'm going to make a motion to amend the second bullet point to include the clause, as long as their salary was below grade maximum.
I'd second that motion.
And that clause will need to be added to the end of the first sentence of the second bullet point with a comma preceding it before the period. And so that's, what do you mean, no? Did you say no?
Yeah, I think it goes at the end of the second sentence of the second bullet point.
Well, it's an additional high-performance increase as long as the salary was below grade maximum.
Should go with the
Okay.
percentage.
You want to go with the percentage? Fine. I change my motion. I yield. I change my motion to be at the end of the second sentence. Mr. Drake.
Mary Pepe sent us the schedule. I just popped it up on my device. There's only one, as Mr. Menarche said, there's only one person at the max of the range. Who is the direct? Okay, it's the Director of General Services. Don't know who that is. The salary is $141,899, and that person will not get any will not get any raise, period, if we do this, and therefore I don't recommend doing this. I think you get these words, as long as their salary is below grade maximum. Do you really want to cap that person without knowing their performance?
Mr. Weisbrod? Mr. Raymer.
So I wonder if it's necessary for us to act upon that tonight. I recognize we're trying to be prompt in responding to something that was done by the RTM, but maybe this would be something that should be referred back to the HR committee. And if there's language issues, let them correct the language issues, even if it doesn't have a lot of application to a lot of employees. And at the same time, they can resolve the question from a policy standpoint about whether or not we want to run the risk of disturbing maximums on salary grades.
Okay, we have a motion to amend on the floor that's been moved and seconded, so we're going to dispose of that motion first, and then if somebody else wants to make another motion to refer, then we can take that up, but first we have a motion to, Mr. Raymer seconded, and it was in my motion, motion made by Ms. Oberlander, seconded by Mr. Raymer to add the clause at the bottom of the second bullet point with the comma reading, as long as their salary was below grade maximum. Okay, we have Ms. Tarkington.
I would support this. I think it makes sense, and I think picked up a flaw here. But, so I will be supporting your motion, seconded by Mr. Raymer. But I'd also like to point out here that the current, in effect, structure is identical to this, but there's an additional 0.5%. In both of those additional bullet points, it doesn't have this additional clause. So it's got that flaw in the existing system. You are now, if people want to correct this, they all should be voting for your amendment. And so that's what I would recommend.
Thank you for your support, Mr. Mason.
Drafting on the fly is always my favorite. I wasn't in support of this motion or the original motion. I thought this was a very simple task for the budget director to inform all the appointing authorities in the town that there'd been a reduction by the RTM, that the MCs, regardless of our request, that the money had been reduced by the RTM, so the plan would be back to 1.5 and 0.5. This way, all of the appointing authorities could plan accordingly. The drafting now is whatever you want to do on motions, but the simplest way to handle the RTM change is to simply notify all the appointing authorities that that's the new limit set by their spending.
Okay, we have a motion on the floor that's been moved and seconded. Are there comments on the motion to amend? Okay, hearing no comments on the motion to amend, I'm going to take a general hand vote. All in favor of the motion to amend the resolution, please raise your hand and say aye.
Aye.
Any opposed? Mr. Drake? Any abstentions? Mr. Turner? So that item has carried, the motion to amend has carried 10-1-1. We now have an amended motion on the floor. Okay. Is there another motion that someone would like to make regarding this motion? Okay. I just like to respond. I actually think that the BET approved a program. If we want to change the program, the RTM does not, even though they gave direction on what they felt, they do not change BET action. We need to actually take action, which requires a vote on either to amend our program or to affirm our program. So we have a motion on the floor to amend the program. There's been no other motions, and I don't see Ms. Moriarty.
I just want to make a comment about this because there are two ways as we consider what this change will mean to our employees. These employees are the ones with the most senior responsibility, have a great deal of expectations on them. In their agreement working for the town, they do not get any seniority payment or any steps, which some of the members of our union contracts do receive. And we do value their service and rely on them to help us achieve our objectives for the town. Understanding the value of these employees is balanced against what the members of the RTM voted on, which is the signal it sends as far as GWI increases to the unions in their labor negotiations. And so it's balancing those two objectives. I'm going to vote in favor of this change. I'm going to respect the RTM's role in signifying what they would like to see. I'm not convinced that it's the right decision, but I did want to put the rationale on record.
Any further comments on this motion? Okay, it's a motion by Ms. Tarkington, seconded by Ms. Moriarty, subsequently amended. We'll start with Ms. Vasiliotis.
Yes.
Mr. Turner.
Yes.
Ms. Tarkington.
Yes.
Mr. Raymer.
Yes.
Ms. Crumick.
No.
Ms. Moriarty.
Yes.
Mr. Mason.
Yes.
Mr. Drake.
Yes.
Mr. Weisbrod.
Yes.
Ms. Hess.
Yes.
Mr. Deuce.
Yes.
And I'm going to abstain on this one. This motion has carried 10-1-1. Okay. Okay, we now get to the chair's report. So my first item on the chair's report is just a thank you to my colleagues. to the Finance Department, and to the RTM members, some of whom are in the room, for all their hard work on the budget process. Our votes tonight conclude our budget process for this, for the upcoming fiscal year. It was a commitment, and I know everyone is working hard to represent the residents and the taxpayers' interests, and I appreciate your efforts on this behalf, and thank you particularly to the Finance Department. A couple of announcements. There is going to be a public meeting on the Eastern Greenwich Civic Center on Thursday, June 12th at 7:30 in this room, if you're interested in hearing about the status of their work. As part of the BET's continuing education program, we'll be scheduling a tour of Family Center's Health Center. You've all received an email. I'll follow up with you again now that we have passed the budget process. There is a retirement board meeting next Tuesday morning at 8 a.m. I received an email about it today, and we've been all invited to attend by the chair of the retirement board, Joe Pellegrino. If he's listening, thank you, Joe, for the invitation to the BET encouragement. I'll forward that to you either tonight or tomorrow, and if members are interested, please attend. And again, as you've seen tonight, members continue to be hard at work, deserving the reputation, in my opinion, as the hardest working board in town. So thank you, which leaves us to the BET meeting minutes. You've all received drafts of the following meeting minutes: March 18th, 2019, the HDG presentation, the March 25th, 2019 regular BET meeting, the March 26th BET public hearing, the March 27th BET budget workshop, March 28th BET budget decision meeting, April 22nd BET regular meeting. Ms. Cromick, do you want to move the minutes?
So moved.
Is there a second? Second. So the minutes have been moved by Ms. Cromick, seconded by Mr. Raymer. Were there any comments on any of those minutes? Here, Mr. Mason.
I almost had Elaine included in a package as a novelty. It was about 10 years ago, it was a report from a public hearing and that the BET had, and it had named Joe Smith wanted to talk about parking, and Sally Jones wanted to talk about that. And it was 2 pages for a, 48-minute public hearing. Our minutes, I know the work that's involved as being an officer of this board. Our minutes, we're approving minutes now that are 2 months ago. And I know it's busy, and I know the workload, and Catherine and Beth, but we've got to get better. It's so hard to review minutes 2 and 3 weeks later. And this is something that I know we're responsible to get a draft posted within a certain amount of days. Correct? We have an obligation to that. So I compliment the detail and the effort, but there's probably something we can do. There's things in here about, you welcome the people to the meeting.
Mr. Mason, do you have a comment on the minutes?
No, I've made all my comments.
Okay.
Thank you, Madam Chair.
I will just highlight that many of these minutes were on the agenda for last month's meeting, and there was a request to defer consideration of those minutes, actually made by some of your colleagues.
Point of order. Are you making a motion on the minutes?
The motion has been made. I'm responding to your comment about the 2-month delay. I'd like to point out that the minutes were on the agenda for last month's meeting, and the tape will reflect that members asked for more time to review them. So in the future, if members would not like to review drafts of the minutes and just see them as part of the agenda, we can accommodate that, and I'm sure that would allow us to produce minutes more rapidly. So now we have a motion on the floor. And no comments, so we'll take up all of the minutes together. All in favor, please say aye. Aye. Any opposed? Any abstentions? Those minutes have carried, 12-0-0. Mr. Deuce.
Make a motion that we adjourn.
Oh, my goodness.
I second that.
All right, so you've been usurped. I apologize, Karen. All right, adjourned at 9:12.